So it turns out I was wrong about SoFi stock. SoFi has had a very strong week in the past 5 days, with it being up 8.31%. And on the monthly chart, we're up 42.11%, which is crazy. And it is up 56.96% on the year-to-date chart. So in a previous video, I said that I was going to be selling my SoFi stock after taking a look at their financials. However, I didn't end up selling the stock, and it has proved to be a good decision. Just how long can we expect to see this rise continue for? With Cathie Wood selling $5 million of 2 surging tech stocks, this including SoFi. So who is Cathie Wood? She is the CEO of an investment management company. So how much growth is there left within this stock? And if there is much growth left, is this still a good time to be buying in? So inputting some of the data into my Excel sheet, we can see the retention rate, liquidity ratio, and free cash flow for SoFi in the last 5 earning reports. So looking at a liquidity ratio for SoFi, this allows us to see how much cash they have to a debt on a 1-to-1 ratio. And we can see that this is relatively, it's not bad, but it's not ideal. SoFi has been public since 2021, and it has been a company since 2011. And it is still considered a growth stock, as it is continually growing year on year, with the only time they were on a positive ratio being in Q1 of this year. However, this is not necessarily something in which can be seen as a huge negative, as we are still seeing relatively consistent growth. Looking at the trend lines, however, it does seem to play in a negative direction, with the total debt increasing and total cash looking to decrease. However, these are just trend lines. You can't base too much off of this. Next up, we have the retention rate. This allows us to see how much money falls in and out of the company. Again, it is a bit volatile, but it is showing a sort of level of consistency over the last 5 quarters. Obviously, the Q3 of last year was really not good, with a retention rate of -49. But since then, we have been positive. But you do want to see this company at about 10% retention rate, and it is slowly but surely getting there. Whether it's on a consistent basis or not, that's a different story, but it is getting there. And again, the trend lines are expecting this to decrease. But again, you can't go off of this too much, as this just simply takes the trend and continues it using a exponential equation. And now moving on to a free cash flow statement. This allows us to see how much money they have spare at the end of each quarter, and this is not ideal. And again, the trend line seems to expect this to be heading in a negative direction. So now looking at a 365-day volume to price comparison, we can see where the dips and spikes are. Despite these earning reports being not the greatest, but it is showing a consistent-ish improvement on their finances, we are seeing a huge spike in the price. And the exponential trend line is way below the price. It is, however, on par with the volume. So you could see the trend line as a 52-day moving average, and we are well above that right now. So is it a good time to buy based off of this? Possibly not. However, if you're looking to hold it long term, I do believe it is always a good time to buy. However, short term, I do see this coming down in the next few months. Maybe not coming down, but definitely plateauing. It won't see this level of growth for too much longer, I can't imagine. However, I have been wrong about this stock before. It did prove me wrong, so it will be interesting to see where this stock will head. Now looking on a 91-day basis, we can see the volume to price, and again, it's a very similar story. We are, of course, expecting this to go up long term. Short term, we might end up reaching this 52-week moving average, and it's starting to follow that a bit better, but it's hard to say again. With the current volume of shares being traded being well below the average, this could be seen as a positive thing, as it shows stability within the stock. So that kind of goes against what I just said. It could continue to rise with a good consistent basis. And finally, looking at some of the figures for SoFi, they have a very positive beta of 1.73. This just means that it beats either the Nasdaq or S&P on a volatility basis. It's not necessarily a good thing. However, at the moment, it's definitely a good thing as the price is so high. But that just shows volatility. It doesn't show where the stock will head. We can also see a very strong PE ratio of 88 and a 52 high and low difference of $10. And as I said, as this is a very small cap stock, this has great potential under a new presidency, especially as it is beating the market so well already. So looking on TradingView at SoFi, we can see a Sharpe and Sortino ratio of a combined 42.11%, which is extremely bullish, and a Omega ratio of 4.57. That is also very bullish. These look at short-term gains to risk reward essentially. So ultra short-term, this has high potential right now. Looking at what the analysts predict for SoFi, we can see a lot of volatility within the next 90 days, which I do very much agree with. My personal prediction is we will see, well, as of today, we will see a bit of a rise and a bit of a fall, but over long term, we will definitely reach $20, especially coming into the new year. Looking at what the analysts seem to think on a buy, sell, hold rating, they all seem to be saying hold. This is based off of 17 analysts. This, I believe, is just them saying the volatility is high, so it is a bit of a risk to buy in. This is mid-term to long-term. Looking at the Sharpe and Sortino ratio from the TradingView application, we can see that ultra short-term is definitely a buy. But on a 12-month price target, they are expecting this to fall, which I do not agree with. These analysts can sometimes be very wrong, as I'm not sure who said it, but analysts are like tools. They're not always the sharpest. But then again, I'm not a financial advisor at all, so you could say the same for me. Looking at the search term SoFi on Google Trends over the last 5 years, we can see this is steadily increasing, with the top 5 countries of interest being the United States, Singapore, Canada, Hong Kong, and Israel. So this is almost like an important metric to consider outside of the world of finance, as it shows the interest within the general company and what they are doing. So this is definitely positive for SoFi. So that concludes my second analysis on SoFi stock. I am not a financial advisor. You should always do your own due diligence before investing in the stock market. If you have found this entertaining or useful in any sort of way, please do consider subscribing and liking, and leave your comments on SoFi in the comments down below. Thanks for watching, and I will see you for the next one.